How are you, folks? Enzo DiCostanzo, clinical professor, economics and finance at St. Peter's in Jersey City. And today is the third video for the audit assignment. So let's get right to it. Okay, we stopped at question number 7. So we did all the lecture material. So now we're just going to finish this off once and for all. And this is based on auditor's opinion. Is the big part of this question is auditor's opinion. And I'm looking as I'm sort of writing through these auditor's opinion. Yeah, I probably should have italicized some of these, but okay. As sort of, after you do something, you say, hey, yeah, I could have done better with this, better with that kind of a situation. So right there. Okay, so yeah, so we're going to answer these questions. What's it based on? What is the auditor's opinion test? What does the auditor's opinion evaluate? What does it ensure? So those 5 verbs. And the first part of it, it says, what does an auditor's opinion accompany and what is an audit based on? The auditor's opinion is a certification that accompanies the financial statements. It's based on the order of the procedures, records used to produce the statements and delivers an opinion as to whether material misstatements exist in financial statements. An auditor's opinion may also be called an accountant's opinion. All right, so those are sort of the pieces to this. All right, we have a couple pieces here. So we have the 2 of them are there. And actually, this is page 13. This is from here. See, it says it accompanies financial statements. It's based on the order of the procedure. So it's the beginning of the auditor's opinion notes, which we already discussed all this. And actually, what we could do with this is even clean this up even better. Something like that, right? So it's those 2. So what does it accompany? What is it based on? Procedures and records, and accompanies of financial statements. What does it test? Well, the auditor's opinion that accompanies financial statements is based on an audit of the procedures and records used to produce them. As a part of the audit, external auditors will test the company's accounting processes, internal controls, and provide an opinion as to their effectiveness. So once again, so from one page to another, from 7 to 13, okay, it's in here, wherever this you find this in the notes there. And actually, what you can do to really find where this stuff happens, and again, these notes are sort of directly from this. We could just see what it is. You can find it directly there. So actually, this is from internal controls. This is actually from internal controls, which is on page 21. Which again, we lectured on the other day or yesterday. The auditor's opinion that accompanies financial statements is based on the order of the procedures records used to produce them. As a part of the audit, external auditors will test the company's accounting processes and internal controls to provide an opinion of their effectiveness. That's really what you're dealing with. Okay, so you have the 2 places that you found that. What does it evaluate? And again, just to quickly find this, where this is in the notes. Again, internal controls. It says internal audits evaluate a company's internal controls, including its corporate governance and accounting processes. They ensure compliance with laws and regulations and accurate, timely financial reporting and data collection, as well as helping to maintain operational efficiency by identifying problems and correcting lapses before they're discovered in an external audit. All right, so the internal one is supposed to catch any issues sort of ahead of time. Okay. And then we have a little bit of a mention Sarbanes-Oxley and corporate governance. Internal audits play a critical role when it comes to operations and corporate governance. Now that Sarbanes-Oxley has made managers legally responsible for the accuracy of the financial statements. All right, what do these ensure? The last one, the purpose of the internal audit is to ensure compliance with the laws and regulations and help maintain accurately and timely financial reporting and data collection. And that's just from the audit. So I bounced around a little bit from the audit section, a little bit from the a little bit from the audit section, a little bit from the internal control section. Okay, to ensure compliance with laws and regulations, help maintain accurately and timely financial reporting data and collection. Okay, that's what that is. Now, number 8 refers to the Home Depot report, and I think, and again, we'll take the time we need for this. Then there's the question about the workforce. Actually, with the workforce, we could just sort of bounce that very quickly. There's about 500,000 people that work for Home Depot, and I think we talked about that in the first video. It's around page 10. I think it's page 9 or 10, something like that. There it is. The number of associates, obviously the United States has got the majority of them. Some other countries, China, Vietnam, India, Italy, Poland, Turkey. Okay, so but 90% are in the United States. And again, this is, the CFA team just got the company, the subject company, which is Bank of New York Mellon, and the 10K, the annual report is 250 pages. Home Depot's is 85, so it's triple the size. We have to read a couple of those annual reports in a short amount of time. So, like I said, if you want to read something good about a company, the Home Depot one is Walmart. Those are some pretty good ones to read. So, but there you go. That's on page 9 or actually on page 10 of the annual report. So you have it there. So right away, boom, you have that number. Creating the PDF. We worked on that previously, right? Remember we copied. This is the first video. We copy and pasted all the questions here, and then put our name and all that stuff. All you do is hit save as PDF. That's it. Just hit save as PDF, and it saves it as a PDF. And you're done. So, like I said, one of the assignments we're going to have to go into the Excel. I think for the final exam we're going to have to do that. But for now, we can sort of just work with this. All right. So 9 and 10 we covered, and then the last thing, which is the longest one, we saved 8 for the home stretch here of what we're going to be talking about. So first thing, and again, I mentioned this the first day. Let's find the 2 reports of independent registered public accounting firm. So I just copied that phrase, is all I did, and then clicked into the 10K and went to search in the 10K and just pasted that phrase in there. And it should come up twice. There should be, maybe 3 of them, but not here. Table of contents is 1, fine. Page 35, and here it is. This is page 39. And actually, if you guys just don't mind a second, I'm just going to write down 39. And I know there's another one like on 70 something. Yeah, 71. So and actually, these are 2 separate ones: internal control and financial reporting. Okay, those are the only ones. Next, and that's it. If there's 4 of them, I guess. Then it goes back to the first one again. So yeah. So there's just 4 of these things, which is not a lot. So for 39. There. And let's give this a quick read. Actually, here, let's what are the questions? It says, all right, so what accounting firm serves as Home Depot auditor? You go to the bottom. This is only 2 pages, or a page and a little bit. KPMG since 1979. So I like that, since 1979. So I put that in there too. So that's the accounting firm that serves as the auditor. Yeah, and the main areas are financial reporting and internal controls. Those are the comprehensive financial statements, or all the financial reporting, or consolidated. This one, consolidated financial statements collectively. Those are the 2 answers. I copy and pasted the paragraphs. It provides 2 opinions for what area of the firm, what is the subject of the reports, what are the responsibilities of the auditors and directors, the standards, what was audited, what were the opinions, and what was type out the opinion statements, and that's it. So yeah, we can keep all that stuff in our head as we're reading this. It says, so the stockholders and the board of directors of the Home Depot. This is the first one. Okay, this is the report of the independent registered public accounting firm. We've ordered and if you notice, if you look at, I think we looked at another firm. I don't know if it was Microsoft, or I think it was maybe Microsoft, and it was the same, right? In the first video, I think we looked at something. It was very similar. Now, the accountants care about this. The legal department cares about this. The analysts don't really. I mean, the analysts might just read this once somewhere, but the guy trying to do the valuation cares about the cash flows, cares about the numbers. This is a part of the legal part of it. You're fortunate in the sense we have somebody like me who's trained in the corporate finance and trained in legal studies. You have a multi-trained guy, accounting, finance, legal studies, engineering, right? I'm trained in a bunch of different areas. And it says we've audited the company consolidated balance sheets at Home Depot, the company and its subsidiaries, the company, as of the end of their financial year. Their fiscal year ends in the end of January. So the calendar year and the fiscal year don't match for the retail industry because they like to keep January as a part of the year, as the end of their year. So they have returns and things. I think it smooths out because as you're netting out the returns, it smooths out your financial results where you don't start the year with a bunch of returns. I think that's probably the reason why, but there's probably some other reason why. You go just internet or Google, why do retail firms I think I read it somewhere that it's just to include the returns from Christmas and the holidays, and it gives the firm some time to get the books together, and it gives them that extra. They can publish this thing in March or whatever it might be. So it says, okay, fine. So KPMG audited the consolidated financial statements, and for the years ending 22 and 21. Okay. Earnings, the list: earnings, comprehensive income, stockholders' equity, cash flows. That's the list. Remember we said, what's the list? There's the list. So the list is somewhere in here. What's the list? Opinion. There, right there. Comprehensive income, stockholders' equity, cash flow statements, the notes. That's the list. Okay. Related notes, collectively the consolidated financial statements. In our opinion, here's the opinion. The consolidated financial statements are presented fairly in all material respects. The financial position of the company as of January 22 and January 21, the end of January of those 2 years, the results of the operations and cash receipts of the fiscal years in the 3-year period ended in conformity with U.S. generally accepted accounting principles. And again, I apologize. We didn't really go through GAAP, but it's how you recognize a revenue, how you recognize an expense, and then a bunch of other things on top of it. But it's basically those kinds of things. It's how how you legally thinking, how you categorize and recognize what's going on, and how do you put it in a specific category? How do you put it in the revenue box or the expenses box or the financial insurance box or whatever it might be? So it says we've also audited in accordance with. So here's the standards of the Public Accounting Oversight Board. Again, sorry I didn't give you the definition for that, but next time probably should. The company's internal controls over financial reporting. So the two subject areas are internal controls and financial reporting, based on the criteria established by the Treadway Commission. Again, I don't at the tips of my fingers I don't have what that is, but obviously it's how to analyze the financial reporting of companies is certainly what this. So there's 3 sort of definitions floating here: GAAP, Public Accounting Oversight Board, and the Treasury Commission. You should have some background on that. I just didn't. I didn't give you you can't do everything either. This would have been a week going over this assignment here. And it says we've expressed an unqualified opinion, right, which is the best version of the effectiveness of the company's internal controls over financial reporting. So there's your opinion. So you have the standards, the Public Company Accounting Oversight Board standards, and the standards that correspond to the Treasury Commission. And the opinion is unqualified. You have the list of what was audited. Okay, comprehensive income is income from other places outside of your operating business. So if you have, it's basically foreign exchange, selling securities, gains and losses from financial instruments. It's a little more complicated. Stockholders' equity are all the stakeholders in a company. Not all, no. Stakeholders are the main universe. The stockholders are the subset kind of a situation. Okay. And it says that the 3 consolidated financial statements are the responsibility. Again, this compiling the statements is the responsibility of the company's management. The accounting firm's responsibility is to express the opinion based on these consolidated financial statements based on their audits. And we use a public accounting firm registered with the Public Company Accounting Oversight Board and are required to be independent with respect to the company in accordance with the U.S. federal securities laws and the applicable rules and regulations of the Securities and Exchange Commission. And again, the Acts of 33 and 34. So there's about 5 things we could have gone over that we didn't, but I had to limit this, and it's because it's not a graduate course either. We conducted our audits in accordance with the standards of the PCAOB. Those standards require that we plan and perform audit to obtain reasonable assurances about whether consolidated financial statements are free of material misstatements, whether due to error or fraud. Our audits included performing procedures to assess the risk of material misstatements of the consolidated financial statements, whether due to error or fraud, and performing the procedures that respond to those risks. Such procedures include examining on a test basis evidence regarding the amounts and disclosures in the consolidated financial statements. Our audits also include evaluating the accounting principles used and the significant estimates made by management, as well as evaluating the overall presentation of the consolidated financial statements. We believe that our audits provide a reasonable basis for our opinion. And this is like this says critical audit matter. This is like the fourth paragraph, and this is about, what is this about? Accounts or disclosures that are material to the consolidated financial statements involved are especially challenging, subjective, or complex judgments. The communication of a critical audit matter does not alter in any way our opinion of the consolidated financial statements. Taken as a whole, we are not, by communicating the critical audit matter, providing a separate opinion on the critical audit matter or the accounts. Okay, so estimation of store shrink. So now we didn't look at the first no, but it says it's discussed in the first no, the consolidated financial statements. The majority of U.S. merchandise inventories are stated at the lower of cost, first in, first out, or market is determined by retail inventory methods, which is based on a number of factors such as markups, markdowns, inventory loss, shrink. Shrink is the difference between the recorded amount of inventory and the physical inventory count. The company calculates shrink based on the actual inventory losses identified as a result of physical inventory counts during each fiscal period and estimated inventory losses occurring between physical inventory counts. The estimate for shrink occurring in the interim period between physical inventory counts is calculated on a store-specific basis and is primarily based on recent shrink results. We identified the evaluation of the estimation of store shrink occurring in the period between the physical. So this is physical inventory versus sort of the theoretical inventory that's supposed to be there, or based on your records, the non-physical measurement. It's giving some sort of opinion about that estimation. So evaluating the company's estimation of shrink at the end of the fiscal year using inventory losses involved auditor judgment. Fine. So the following the primary procedures were performed to adjust critical audit matter, and we evaluated the design and tested the operating effectiveness of certain internal controls related to the process of developing the estimate of short shrink. We evaluated the appropriateness of the company using the internal and interim fiscal inventory counts to estimate inventory losses in U.S. retail stores at the end of the fiscal year by. So, okay, so they went through the method, sensitivity analysis, trend analysis, testing application methods, certain assumptions, evaluating the method and certain assumptions used. So, okay, so now the note one, just to look at it. There's note one. Okay, yeah, this is summary of significant accounting procedures, and this is all the assumptions that Home Depot makes, use of estimates, what cash is considered, what's merchandise inventories. And again, it's when you do an accounting problem, it's a number in a book and that's it. But when you do this for real, there's a real store, there's a real cash register, there's real sales receipts. There's 500,000 people working there, and God knows how many people in and out of all these Home Depot stores. And actually, the other number that we should have investigated is how many Home Depot stores are there. Let's see if we have that somewhere here. Sorry, it's I guess it's getting its breath up to sort of figure this out, but no matches were found allegedly. It's claiming there's 2,000 stores or thereabouts. Let's see. Stores. This is one of those things where you have to sort of read the whole thing. Before you can really dig it up. I'm surprised. You usually, here it is. There it is. It's usually at the beginning. 2003-17. What did our online number say? Yeah, 2003-17. Okay, same number. That's something else. I should have jammed that in there. How many stores are there? It says as of the end of fiscal 2021, how many stores are operated throughout the United States? So this was page 5. So that's space. It was incorporated in 1978 and talks about the business. Okay. So yeah, so that's under item 1. That's under item 1. And we'll say note 1. There it is. Summary of accounting procedures is on page 49. And there you go. So a couple accounting pronouncements, foreign currency translation, how to define comprehensive income and income taxes and earnings, recognized and accumulated foreign currency translations, adjustments, accumulated other company include net losses, cash flows, hedges. Yes, it's the financial instrument movement, the gains and losses basically of the companies is really what that is. But that, we're not going to deal with that here. So this was property equipment. So this is a little, yeah, the accounting policies. It's a couple pages. It's not short. Okay, it's a few pages. The intangible, some of the debt numbers are here. Okay, how you're amortizing, that's with intangible assets. What you're doing with that, and you can see it's not an insignificant number. That's two. The total is $2 billion. Well, about 180 million, per year, but still, not nothing. And then really the notes just break out in more detail what's in the financial statements is what that is. We go through the accounting procedures. Like I said, again, with what I do for a living, this is the lifeblood of being an analyst. So that's why I really spend the time on it. So, okay. Anyhow, so that was 39. Yeah, so for 39, it's the whole shrinkage thing and how you measure the inventory and things of that nature. Okay, that's all that really is. The next one and the last one, it's another report of independent registered public accounting firm. This is opinion on internal control over financial reporting. Again, to the stockholders of and the board of directors of Home Depot. Again, so they didn't in this particular, they didn't give this is just a page. They didn't give since 1979 or whatever it was. They didn't give all that, but it's KPMG again. Okay, and again, there's a couple parts to this. It says we've ordered Home Depot and its subsidiaries. So now the internal control over financial reporting as of January 30th, based on criteria established by the internal control. So the standards here are the internal control integrated framework of 2013, issued by the Treadway Commission, is what this is. And it says in our opinion, in KPMG's opinion, the company maintains all material respects the effective internal controls over financial reporting as of January 30th, 2022, based on criteria established in the Treadway Commission work. It says we've also ordered it in accordance with the Standards of Public Accounting Oversight Board. So those are the two standards: Treadway Commission and the PCAOB. The consolidated balance sheet of the company, related consolidated statements of earnings. They're restating this. They did this audit. So there's a letter for the financial reporting. There's a letter for the internal controls. So and the cash flows for each of the fiscal years and 3-year period ending the last day of January in 2022 and 2021. This report was dated March 23rd, 2022, expressed an unqualified opinion on those consolidated financials. So they're restating that there's, it's following GAAP, basically, is what they're saying. The KPMG is saying the basic is the company's manager responsible for maintaining, again, what the company's responsibility is. It says it again. It says it's responsible for maintaining effective internal control over financial reporting and the assessment of the effective internal controls over reporting, including the accompanying management report and internal control over financial reporting. KPMG's responsibility is to express the opinion on the company's internal control over financial reporting based on the audit. And it says KPMG is a public accounting firm registered with the PCAOB and required to be independent with respect to the company in accordance with the U.S. federal securities laws and the applicable rules and regulations of the SEC and the PCAOB. Okay, it says they conducted the audit in accordance with the standards of the public accounting, whatever that was, public accounting oversight board. And the standards require that we plan and perform the audit to obtain the reasonable assurances about whether effective internal control over financial reporting was maintained. The store in Queens, the store in Essex County, right, or the multiple in Essex County. The audit over internal control included obtaining an understanding of internal controls over financial reporting, assessing the risk that a material weakness exists. I'm sure there's software out there. I'm sure there's a whole process that the accounting firms execute to test this out. And evaluate the design, operating effectiveness, internal control based on the assessed risk. Our audit also included performing such other procedures as we consider necessary in circumstances. We believe that our audit provides a reasonable basis for opinion. The company's internal control is designed to provide reasonable assurances regarding the reliability of financial reporting and the presentation of financial statements for external purposes. So it says the definition and limitations of this. But it says the company's internal control includes policies and procedures pertaining to the maintenance of the records, reasonable detail, accurately and fairly reflect the transaction dispositions of the assets of the company, provide reasonable assurances that transactions are recorded as necessary to perform preparation of financial statements in accordance with the generally accepted accounting principles, and that receipts and expenditures of the company are being made only in accordance with the authorizations of management and the directors of the company, and provide reasonable assurance regarding prevention or timely detection of unauthorized acquisition, use, or disposition of the company's assets that could have a material effect on the financial statements. There's inherent limitations of internal control of financial reporting, and that may not prevent or detect all the problems, and the projections of any evaluations of effectiveness to future periods are subject to the risk controls may become inadequate because the changes in conditions or the degree of compliance of the policies or procedures that may deteriorate. So yeah, it's like the election's happening tomorrow. How secure is the communication of the results of these elections in Georgia and in Pennsylvania and here and there, Michigan and Arizona and on, Nevada, all these different places. So those are the two letters. Okay, those are the two letters. So we went through the answers, we read the two letters, and you could cut and paste different pieces from that. I think in a short video, a short ending video here, I think we covered everything. Like I said, you type out all your answers, and your last step is just doing this: file, save as. And that's it. We hit the PDF button, give it a couple seconds. And that's it. But there you go. So now you have your PDF. The assignments and the names, and like I said, certainly you want to be careful that you're on the appropriate pages and you're not cutting your answers off in an awkward way. Okay, that's it. And like I said, feel fortunate that this was only reading a couple pages, because these things can be very long and a lot of effort in reading these things. So this was a shorter version of what we were talking about here. Okay, but you have the answers to all your questions, and this is the end of the lecture for the audit assignment. So good luck, and we'll see you in class. All right, folks, thank you.